Welcome back to Investing with Confidence. My name is Joshua David. I am having a great time out today talking about the financial markets and how we can utilize these for potentially our benefit. I mean, it's all about
Mhm.
what is your objective? What do you want to achieve in the financial markets? And what type of a plan do you need for that objective? If you happen to miss two tickets for the investing class, call 952-814-4410, or you can register online by going to learnwithota.com. We're going to cover up options here, but if you have questions on the live stream on YouTube here today, make sure to type them in. We're going to try to answer them as we go through as well. So, Al, with people that are listening right now, a lot of them probably do have longer term investments. They have
Mhm.
either
Mhm.
a company sponsored 401k, they may have an IRA, whether it's self directed or it's through a broker or an advisor,
Right.
but they want to learn and understand more about what are the rules and tools to make better investing decisions with those. Options is what a lot of people are utilizing in their retirement accounts for several reasons,
Mhm.
no pun intended for the options, right? So let's get into and unpack a little bit what options actually are. Keep them high level, so our listeners understand they might be able to utilize these in their retirement accounts.
Yeah, options have options, I guess is what you were saying. That's why they're called options. But there are a number of things, number of advantages that this provides to your existing portfolio, or even if you don't have a portfolio to help you build one. But one of the rules that the smart money has is don't lose. And if you do, make sure you lose small. How do you do that? Because if the market crashes, if we go through a bear market, all of the good companies, about 90% of the market, the stock market goes down. So all the good companies are going to go down with the bad ones, ones that probably deserve to be beaten up. But unfortunately, the good ones go down too. So how do you get around that? What if you don't want to sell any of the stocks that you have? That is one way of not participating in a down market. But if you don't want to sell them, maybe you've got some good dividends. Maybe it's the stock of a company that you worked for, your parent worked for, one of your parents worked for. Well, if you don't want to sell, then how do you protect yourself from a down market? Options are a fantastic asset to use for that. It's like an insurance policy on your portfolio. You don't have to have that particular option insurance policy on each individual stock either. Most of the assets you have, if you have a stock portfolio, probably mimic one of the indexes, whether it's the Dow, the Nasdaq, or the S&P 500. So what if you just had an insurance policy on that index? Then you could hold on to the stocks that you have, the protection with the index that you have the protection on. That actually is going to go up in value to kind of counter the downward move in the value of your stock. So you don't have to sell anything, but you can still protect your overall portfolio. What if you what if you could get paid to wait to do something? What am I talking about? Well, let's just say that you're looking at buying the stock of a company that's trading at $200 a share. You think that's a little high. That's a little overvalued. You would love to have a position in that stock at $180. Well, what if you could get paid cash just to wait until it comes down to 180 and then you're in at 180? That's what you can do with options. What if let's say you buy that stock at 180, it goes up to 200 or 3, let's say it goes up to 250. You got a nice profit there. You're thinking, I think maybe this is the time to sell, but I'd like to get a little bit more money out of it. I would love to see it go up to 270. What if you could get paid cash to wait until it goes up to 270 and then you sell at that point? You're getting paid to wait, paid for your patience
So that's like
with
a
options.
premium, right?
Yeah, you're getting
Is that what it's called?
right. You get a premium because you're selling something like anything else you sell. You get a premium for that.
Think about it like an insurance company. Insurance company sell insurance. They collect a premium
Correct. Hmm.
every month or
Hmm.
every 6 months, however
Right.
your plan is
Right.
set up. But with options, it's kind of the same concept, right? You're selling insurance. You collect a premium. That way, and also if price does nothing, is there opportunities in sideways markets?
Well, absolutely. Options are probably the best asset to trade in a sideways moving market. Let's just say that the market's trading within a range, a trend, within a range. Maybe it goes up a little bit, it goes down a little bit. It just kind of stays within those two boundaries. The market can open the year and end the year at exactly the same place, but there's never going to be just a straight line where it just stays at that value. It goes up and goes down during that time period, even though it might end exactly where it started. But each time it has moved, that's an opportunity for you to participate. And options can be used in those trending markets, so sideways trending markets. You can actually have an options position that will benefit you if the price goes up, down, or remains sideways. There's some great opportunities there for you. But just to keep it very simple, there's only two options, and there's a call and there's a put. Everything else that you might have heard, whether it's something like an iron condor or butterfly spread, those are just combinations of calls and puts.
So when you talk about calls and puts, we have a question on YouTube. What is a call? What is actually a put? What does it actually mean?
With an option, you're trading an option. It's a contract on something. There's a derivative there. Their value is derived from an underlying. So let's just say that you're trading options on a stock. If you think a stock is going to go up in value, there is a call option that you can buy that will go up in value as the underlying asset, the underlying stock goes up. So kind of look at it like a phone. If you make a phone call, you pick up the phone to make a call. And then when you're done calling, you put it down. So call options will go up in value if you own them when the underlying goes up in value. If you buy a put option, that goes up in value as the underlying goes down in value. So options will allow you to participate in up markets, down markets, and as I said earlier, in sideways markets. But you can do that if you own a stock. You can increase the returns of that particular stock by using an option strategy we call a covered call. If you don't own the stock but you'd like to participate in the movement of it, you can simply just buy a call on that stock. You'll benefit as the value of the stock goes up. And there's a multiple there. Kind of a rule of thumb is that if the underlying stock or asset is up about 10%, the option is probably going to be up 100% or more. So you get a great return potential there. You can identify exactly what the risk is. And by the way, risk management is the number one thing that we teach our students. For most of you, you're in a portfolio. If you're subscribing to that buy and hold strategy, you were told don't worry about corrections or crashes because the market always comes back. And you know what? And it does. But every time the market goes down and your portfolio goes up, any gain that you have is just replacing the loss. You have to have your portfolio work hard to kind of pull itself out of a hole before any profit can be achieved. And whatever the downward percentage is, you have to have more than that to get back up to where you were. If you have a 40% drawdown, you have to be up 67% just to get back to where you were. If you're down 60%, like a lot of people were in 2008 to early 2009, you have to be up 150% just to get back to where you were. You can't let that happen and have an attractive portfolio when you really need it when you're retired. So you can eliminate the big drawdowns. You don't have to participate in them. In fact, as I mentioned, with a put option, that goes up in value as the underlying goes down. So you can participate potentially beneficially in a down market.
Well, and that's a great thing, too. It just gives you more opportunities. I mean, a lot of people like to trade the oil market, either the futures contract or the ETF, and there's options. So as the market has been going up with oil the past year or so after that big drop, there's been opportunities with options, but not utilizing all of your capital because you're leveraging yourself. You're utilizing, or like as I kicked off the show, getting more bang for your buck.
Right.
And just to give an example with sideways markets, the tech sector, the NASDAQ, has been pretty much sideways since the beginning of the year, actually. So if you're looking at the price of the NASDAQ right now, it's at the same price it was back in January, roughly around the 19th.
Sure.
So with that sideways markets, there's opportunities potentially to collect premiums if you understand the right techniques, have the right rules, but also have the right tools within each market.
Right.
And Al, it's getting close to the end of the show. And we've talked about the shorter term strategies, the longer term strategies with 401ks and IRAs. And more people, I was talking to someone this morning, they wanted to take more control of their assets, more control of their future, rather than having somebody else dictate it for them. I mean, most people don't want to be at mercy to their broker, or at mercy, even worse, to the market. So I want to give away one last set of tickets to an investing class, and we talk more about some of those common mistakes that novice investors make, but most importantly, how to minimize them. Al teaches these, gets into managing risk and navigating these volatile markets, the core strategy and how it's designed to follow current market conditions, not what happened 10 years ago. What's happening right now. So callers 1 through 10, you're going to receive 2 tickets when you call in. We do these during the week and also on the weekend. You're also going to receive the Financial Quick Start Kit. That will help you get started right away. Call 952-814-4410. That's 952-814-4410. Al, hit them up with some good old words of wisdom.
Well, Josh, sometimes we're presented with opportunities that might not repeat themselves. And if you don't take advantage of them, they're gone forever. So the key is to be prepared to take advantage of those opportunities. That's a formula for success. It's when preparation meets opportunity. Right now, we're being presented with some of these opportunities, great opportunities. There's quick moving markets are giving us big up movements, big down movements. That gives us the chance to improve our market returns significantly, but only if you have the proper preparation. That requires the appropriate knowledge and skills to use the knowledge to your advantage.
Once again, you got to take action. Action is doing it right now. Calling for this investing class. Call 952-814-4410. As always, same time, same place. Next week, retire young, my friends.
Thanks.